Hey, it's Richard with Matthews Wealth Management. We're going to be covering the September of 2023 market update. This is the asset class performance. So we'll just dive right in, try to keep a video short. I'm going to apologize for the hair. I'm getting a haircut tomorrow. So this looks like COVID videos when I had the long hair from not getting a haircut. It's been busy. We've done reallocations, videos. I did take a week vacation. That was needed. But anyway, here we go. NASDAQ composite, so large cap growth basically is what we're covering here. The up and down, and then we had a great summer, right? And ouch, that's hurt, right? September was really, really rough, especially this. This was really timely, I guess, for our reallocation, which I'll do a video. It won't be a big deal because we didn't do a ton different, but we did some stuff that I'm happy with. So anyway, yeah, so still up 26.7% year to date as of today. If we dive into the S&P 500, that's even harder fall, right? So that would be kind of the big picture. S&P 500 is all stock market. Think of it that way. So the overall stock market's only up 10% on the year, as opposed to large cap growth, up and down, good summer, and then the crash towards the end of September. So we did our reallocation, by the way, on September 21st. Just if you ever care to look back at this video and then start to piece things together. So, all right, I'm gonna get the other side of the screen here. 1.36, ouch. This is the moderate, right? So somebody in a moderate portfolio, right? As Dow Jones sees it, stocks and bonds, equal weighted type thing. Okay, so ouch, man, that was just off a cliff. And actually we're into October now. We don't have a Speaker of the House anymore as of yesterday, so hint, hint what today is. Yeah, August was rough. September was also rough. Here we are, year to date, only up 1.3%, but the economy's fine. Right? Yeah, y'all don't believe that if you're watching this. So let's dive into each asset class. You'll notice we have some year to dates dropping in the red. They're negative performing year to date. Everything dropped in the month of September, right? -2, 3, 5. So growth got hit the hardest. Hey, that's normal. 3, 5, 5. That's normal. 5, 5, 7. That's normal. Yay, normal correlations. I wonder why we're seeing that finally, as opposed to, oh, this is a normal correlation, I suppose, on an up market, bull market here, 3.5, 7, 27. Just leverage. Leverage. Who does leverage in our financial system? I don't know. -2 on mid-cap value. This is supposed to be the safe stuff, guys. It's the least safe as opposed to 9, right? So we have actual opposite directions in the mid-caps, right? So mid-cap equities, think of like Tesla. This is Tesla over here. It shouldn't be like this, right? Why is it that the growth guys are doing great year to date? Not so good on the month, but people who've been around good companies that provide for our economy, not doing so great, right? So it's a valuation thing. It's how people are perceiving things. Small cap, yeah, they're going to be more volatile as they should be, just because they're smaller companies. But negative for the year, 8 and 10. So actually outperforming the blend or core and growth, interchangeable words, in the small cap region. So kind of interesting. All right, let's dive into internationals. International and emergings both lost, 7 and 2. Kind of makes some sense. I'm good with that. Let's see. Bonds all sold off, and this is the big one. We're now down 5% on long-term bonds for the year, and that's the big key to what happened on that big drop. Bond yields are taking off, which means bond prices are crashing. I know it's hard. I know it's really hard to understand, but life makes a lot more sense if you dive in and try to understand it. So basically a wash on short terms, intermediates down 1, still barely positive. So your short-term bonds are still doing well. It's the whole yield curve that everybody's talking about. Long-term bonds, buying opportunity, guys. You got a decent yield right now, so look into it. If you're a money manager and you're watching this just to disagree on stuff, why? Why would you disagree on buying into long-term bonds? Hint, hint. So tips are down, great inflation protection there, right? High yield bonds lost 1%. That's expected. That does not shock me or bother me in any way. Still, by far the best bonds to be in. It's going to be that risk premium as opposed to equities. when it comes to the high yield versus dividends and versus the appreciation of large value, for example. So, commodity world, oil's taken off. Have you watched the gas pumps? Yes, you have. Gold is barely up on the year. Doesn't make any sense. Real estate crashing. Housing starts are almost gone. Refinances are distant. It's rough in real estate. Commercial real estate, we've got one holding that's in a couple of client accounts that's just getting hammered in its commercial real estate income. So expect to see a bunch of that stuff selling at discount. Bitcoin went back up. More speculation, I suppose. It's up. I mean, that's something worth looking at. Is what is it that's up? And it's very few asset classes, but when they're up, they're way up. So 62% year to date. I'm actually going to dive in and let's go through that. So oil's up 18, Bitcoin's through the roof. I guess 5's okay. 7, 2's nothing. 10, 9, 27, 7. Right? That's it. Just those asset classes. Everything else is down. I mean, it's feast or famine, basically, is what we're looking at. So NASDAQ, this is as of the end of September. If you saw the beginning thing, that was live like today for the graphs that I do. So as of the end of September, NASDAQ was up 27.26 versus only 12 for the broad stock market. A moderate portfolio, 3.22, as opposed to that 1 I said at the beginning. And then we're now beating the moderate because secrets. No, there's obvious ways. Watch the reallocation videos. There's reasons how we preserve downside and maximize upside. So modern portfolio theory is great with a little bit of tweaking. But yeah, so that is the asset class performance for the month of September in 2023. And I'm going to shoot the other video on M2 money supply next. And yeah, see you next month.